The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good afternoon, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. I wanted to start off with something a little different. Rick Beyer wrote a book. It's called The Greatest Music, 100 Tales from Music History to Astonish, Bewilder, and Stupefy, Stories Never Told. I had it for quite a while, and I'm always fascinated when I read it, because then I forget about it, and I read it again and say, oh, isn't that interesting? So this is from 1918, the year 1918, pretty much 100 years ago. And on September the 11th, 1918, Game 5 of the World Series was scheduled for Fenway Park in Boston. The Red Sox were going to play the Chicago Cubs, and since this was during World War I, many wounded veterans would be in the stands. The start of the game was delayed when a dispute arose over, guess what? Money. There is, after all, nothing new in sports. Players were upset that they weren't getting a bigger share of the World Series purse, so they decided to strike. They refused to take the field. Hasty negotiations took place under the stands as fans grew impatient. After about an hour, the players reluctantly agreed to play ball for the sake of the vets. Caught up by the patriotic fervor and no doubt trying to placate the restless crowd, the happy Red Sox owner had the band strike up the Star-Spangled Banner. It was the first time the song is known to have been played before a ball game. The wartime fans rose and doffed their hats out of respect, and a new tradition was born. The Red Sox went on to win the series. That happened to be the last one they would capture for 86 years. I'm always fascinated by how traditions start, how the extemporaneous adaptation of something eventually turns into something else. And when I came here, I was struck by the fact that in fact, people stood and sang the national anthem before sports. I kept saying to myself, this is local sports. Why? I understand if it's an Olympic Games or international sports, even then it's a little odd. But of course, I got used to it, and this is just a tradition. So I thought I'd bring up the genesis of this whole aspect of singing the national anthem. All right, let's get to the numbers. The Dow is up 4 at 22,288. The S&P is up 2.56 at 2499. The comp index, the last time I looked at it, was up. It's up 34 at 6,414. The VIX index is down a fraction. It's at 10.18, down 0.01. You've got the E-mini right here, up $1.50. Now we can look at this and say 2507.25 on the left at that peak C, and we've got a 2505. So it's getting there. It's I would have preferred maybe $1 higher to say let's call that a peak C1 and C2, because at this point I can start at least considering that the S&P has gone to a leg D, the cash, and the E-mini is about to close to catching up, but it's got the derivative. If the derivative makes a peak C1, C2, that's fine with me. When you look at the Dow, you'll see that the Dow there's no way I can count this. Yes, I can drag that peak D from the 8th of August over to the peak C high of 22,419 on the 21st of September, called it an E/C. A lot of it still looks like it's getting close, but it isn't quite there to at least a peak C1, C2. I still think there's a chance that we could get to a D, but I'm not. I'm right on the cusp. If I see technical failure, I'm quite prepared to start the short position in the Dow. Meantime, back at the ranch, what we're looking at is the parameters are very easy. A push above 22,375 today would be very positive. 22,375, and we're at 22,289. That's a long way to go. I don't know how they can do it. Anyway, that's going to be tough. 22,225 is really the key support that I'm looking at. A break under that would say, oh, you got to be careful, because then you kick in with the 120-minute chart and the Chapman wave 5 to the downside. There it is, 120-minute chart. Right now, it's a little ambiguous. We've got a peak B, a gray B, and it's still pulling back under the 9-period moving average. Let's continue. We're going to go to the QQQs. QQQ, the NASDAQ Power Share Trust Series, trading at 143.80, up 63 cents. Hit the 9-period moving average resistance at the 144.20s and pull back. Now, this is going to be very interesting because the weekly chart is suggesting there's a breakdown in the MACD. The stochastic is still holding at 85%. That's good. And the price is right now sitting just above the 9-period moving average. That's good. We've got a few days to go, 2.5 days to go, in fact, for Friday close, and we'll get the end of the week. But what is really fascinating about this whole thing, 140, what did I say this morning? Yeah, 144.60 would be a very good move to the upside and suggest we could go higher, but a break, another close below the 9-period moving average would be very negative. But even he had 143.83. That's not good action. If there's a close today closer to the 143.60 area or lower, that is going to be very negative. Couple of questions I got. I'm going to get to them. A couple of emails I've got. Let me just do this here. I want to look at gold. Gold is down even more today. Is down 12 to the 1288 area. Remember what I had said is that looking at my daily chart, the 200-period moving average of 1272 is probably an area that we're going to see. And of course, to go with this is, and we are long the dollar. In my opening call, my newsletter, we're long the UUP, which is the trading vehicle for the dollar. And the dollar is up nicely. It's up 32 cents at 93.35. I'd say that 93.78 to 94.25, if I remember the numbers correctly, would in fact be the resistance I'm looking at on the upside in this very short-term period. But it's still only a peak C in the 120-minute chart. I think the dollar's actually going to move up. Dollar doesn't usually have a move that has very strong follow-through and then break down. The dollar's just been having follow-through to the downside and breaking lower. So this move to the upside makes the 9-period moving average of 92.96 on a weekly basis very important to hold into the close. Actually, that's not good enough. It really has to be closer to 94 than 93. And then I'm going to say, hey, that is really good action in the dollar. So I've got a couple of questions, but before we get there, IWM, Russell 2000, another new high, gaps up to a leg D, new recovery high, happens to also be an all-time high. This is very good action, and this is the reason why I'm having such a difficult time in the indices actually going short with conviction, trying to find certain stocks that I think are good shorts, but in a way I'm staying a little bit away from the indices just at this moment. By the end of the day, I might change my mind. So we wanted to look at the TLT, which is the bonds. Gaps huge down to the downside. 125 is a key support. Is a 125.07 down $1.69. And that has really helped the XLF. That's why we're long a bank stock, which is doing fabulously. And that XLF is up 25 cents, 25.64. Basil Chapman, Tiger Technicians Hour. I'll be right back. How's up?
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. So let me just do this high-grade copper right now. High-grade copper is... it's up 0.007 at 2.9265. Allows the action. Look how it's been repelled so many times from the 9-period moving average. Sell mode in the, you remember we discussed this 2 weeks ago. 3 weeks ago. Sell mode in the daily. Sell signal in the weekly. And I am going to wait. Technically, it should be a down arrow. It should be a sell mode in the weekly, but I really would like a little more room to the downside of the MACD. See what happens by Friday. But everything about it says there's a sell mode in the weekly. It's just a leg D in the monthly, but it's also a D. So you've got 3 Ds. Wait a minute, is that a D or an E in the 120-minute chart? I forgot to count it. I can't remember. Anyway, we're looking at copper, highly vulnerable, platinum. The old platypus. Platinum is also very weak, like all the other metals we were looking at. It's down 170 at 927. I wouldn't be looking at it just yet. Maybe it's getting close to a bounce, but boy, it's not good action. And crude oil, when I last looked, was up a tad. Yep, it's up 20 cents at 52.08 at a leg D, probably a peak D, but making a high-level consolidation at this point with the technical still strong in the daily, weekly improving. Now, I had a couple of very good questions. Boy, I hope I can find them. I just had a ton of emails at the same time for some other thing that's going on, and it's got me all... What was the question again? Give me 1 second and I'll think it through. Looking at, that's right. Where would I be considering shorting USO? The USO right now has made a peak E in the daily chart. It's made a little double top. No, it's just failed. So the top is 1056 on the 25th. Goes with a high of 1051 yesterday, and today 1056. So it's got a double top at this particular point. I'm not interested in shorting crude at this particular point. I might be in a couple of days, but at this particular point, the MACD and stochastic are absolutely fabulous. In the daily, the weekly is improving tremendously. The 120-minute chart is just suggesting a rectangle sideways move. I'm not interested in shorting crude oil, not at this particular time. Then I wanted to do something here. Oh, that's right, the TNX. TNX is the 10-year, and it's jumped up to 22.98, 2.298. Weekly chart did finally break that trend line resistance. This is a gray leg A in the weekly chart. MACD and stochastic are improving. I think the yields are going to be going higher. And if anything's going to turn this market around, I think it's going to be the fear with higher yields. Look at the HGX. It was doing absolutely fantastically, and it's just gone to a leg E/C in the daily. MACD is good. Stochastic's very nice at 87%. Not great, but very good. And the weekly chart has made the second new high from that previous peak E. Is this now an F/B? I'm just going to leave it as it stands like this. Even though it's gone to a new high, I'm still calling it, just for technical purposes, a gray leg B. I just need a little time. I'm not going to make anything of it right now. Let me just get out of this, and then I can go to some of your questions. This is just a technical page. Close the workspace, save the workspace, and I want to go to the triple yield chart right here. You'll see something very interesting. There we go. Recent LT charts, mirror. There we go. Now look at this. In my triple yield chart, white is the TYX, brown is the TNX, the 10-year, so it's 30-year, 10-year, and cyan is the 5-year. What we're looking at, as soon as it populates, I love that word, you will see that you've got a leg A to the upside. You've got a leg in the 30-year. Hasn't broken above the previous high of 29.44. It's at 28.48. Got a long way to go. You're just touching that resistance line in the 10-year T-note, TNX, leg A, and leg A at resistance in the 5-year. So we're going to be watching this very closely, because if all three of them take out decisively the left side high of the week of the 7th of July, I think we're going to go higher. And that's going to be very interesting. And then I think the market becomes pretty vulnerable. So let's just go. I want you to do this, the HGX. So look at this. This is wood, the iShares Global Timber and Forestry ETF, maybe making a peak E this week. It's went out of the trend line resistance, came back into it. We'll see what happens. And you've got a potential double top, although 287.12 was pierced because it went to 289.87. This week, there is a new recovery high in the HGX, the Philadelphia Housing Sector Index. So I'm thinking of this. Normally what I would do, I'll do it now, is I would draw in a cup formation, and that cup formation speaks to the pattern that we call in the Chapman Wave methodology. If you know my CED, there's a pattern that I call the drop bucket or double top formation, chapter 22, slide 366. And that shows you that at that second high in the weekly chart of the HGX, HGX, look at this. The technicals at this point are much weaker on this leg than it was on that leg high. So nothing to do right now, just watching it very closely. So where do we stand? So the big question is, all right, Mr., where do you stand? We stand that we have 8 longs. All 8 are, no, I shouldn't say 8 longs. I think it's less because we got stopped out yesterday. We had a profit of $1.10, and then we lost 50 cents in the diamonds, and we tried to get in today. Only if certain conditions were met. They were not met, so we're not in. I'm very close to switching to the short side. Well, I'm not switching. We don't have a position. So going to the short side, I'm thinking of it. I'm thinking of it more and more right now. But I do think we're just in this chop, chop, chop sideways range for the moment. So let me just do this. You've got a question here, which was the EEM. And the EEM has had a spectacular move. Look at this weekly chart. Look at the monthly chart. It goes from the 28s down about 2 years ago. And now it's trading. It's hit 40, just missed 46, and it's trading at 44.12. Peak F top and the iShares Emerging Market ETF, 44.12, down 37 cents. Leg B to the downside, lowercase b, remember? And look what's happened. You've gone to a peak F in the daily, a peak F. I'm almost sure this is a peak F in the weekly. This is the reason why I'm starting to get my foot off the accelerator, getting ready to hit the brake. Because there's an F in the weekly chart. Monthly is still a leg C and very, very strong. So caution prevails. There's no question about it. So question, Basil, is it negative that the QQQ bounce so far has failed at the 9-day EMA resistance. Now we're talking daily charts, so let me go there. And the answer is yes. To fail at the 9 EMA is always a hint to say, whoa, that's very strong resistance, and check to see if it's been resistance previously. Well, it's been resistance for about 1, 2, 3 times it's been tagged in the last 5 or 6 sessions, and 3 times it's been repelled. So absolutely, it's something to watch. However, this is what I'm looking at. You see the weekly chart, the MACD is very negative, deflected lower, stochastics at 85%, slightly negative, and yet the price is just above the 9-period moving average. I'm going to talk about a few things technically when we get back, and I'll explain why I'm looking at the different tides. That is, how the trends in the daily, weekly, monthly are working in the QQQ series, the NASDAQ Power Shares, NDX 100. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I'm just doing something here with the comp index. That's the very broad NASDAQ. That went to a peak E, pulled back sharply, having a nice bounce. So this is what I'm looking at here. Because of my mantra, which is in a bear phase, bad news permeates the market. The Dow and the S&P are sharply lower. Dow's down between 90 and 120 points. The S&P's down 16 to 18 points. And the VIX index is running strongly. And if you're looking at it in the cyclicality of, say, a daily sell signal, if it's going to be perpetuated in terms of changing a trend and keeping that trend, you will see the bad news proliferate as the market just cannot rally for long and it keeps going down to lower lows. And what we've seen over the last 2 days is, yes, there has been some selling pressure. And the question, very good question in the den, is it a negative that the Q's bounce stopped dead right at the 9-period exponential moving average? Well, that's why I wanted to go through a different aspect. I want to look at the comp index, the much broader NASDAQ composite, not just 100 stocks, but 2,000-ish stocks. Well, that has gone to a leg D. And by a fraction, and whenever you go there by a fraction, you've got to be careful. 6460.84, the high of July, 6460.84, 6477.77, a leg D in the monthly. Now, someone brought up something very important. They said to me, "Hey, we've got D's and E's. Aren't you getting really nervous?" I have to say that I'm looking at so many areas for suggesting strength or weakness that when you see a rally as you are looking at in the XLF, look at this, XLF trading right now, hit the wrong key, hit the right key, trading at 25.65 in leg C suggests this is going to go a little higher. Not only that, we took out the last high of 25.59 peak F back in August. We were at 25.65 in a leg C with at least a D to go. And it looks to me A, B, C. This could be, in fact, this is what I was looking for, some kind of a breakout to say, yep, now we've got everything in line. We've got the D in the weekly chart, and you've extended leg E in the monthly chart. So if I'm trying to put the whole package together, what I am looking at is selectivity is very important. It's what we've tried to do in my opening call for stocks that have done very well. At the same time, I said we've got D's and E's in many places. Have a look at this. General Motors, I'm going to answer the question in a minute, but I like to look at the monopoly set, and I like to look at the chess game to see what, before you make your decision, you want to be able to look at all the different outcomes and potential incomes and outcomes. Look, the General Motors high of 3 days ago at 40.64 with a 40 round number low saw an inside candle yesterday and not an inside candle today because it's slightly lower than yesterday's low, but that was the tiniest little candle we've had in a while. So the high of 40.64, and now we're trading at 40.35. 30 cents lower, big deal. But it's kind of stalling with the MACD still very strong and stochastic at 92% and the on-balance volume flattening out a little bit. So that says to me there's still enough. The tide is still coming in for a stock like a General Motors. Gaps up in a leg D in the weekly. It's in a leg D in the monthly, having broken out. So I can just say we're going to probably raise our stop, one of the stops a little more again, just to lock in at least a gain. But I would love to be able to keep it to see if General Motors comes back to the 38.50s over a period of 2 weeks or 3 weeks and just holds there and doesn't break down. I have to think it through because I don't want to give up gains. We've had some really nice gains. So that's the way I'm looking at it. Now I can get back. So what I want you to show is why there's a rotation going on and how it's impacting certain areas. If you look at the IBB, the biotechs, look at this. Right at the end of this, at the bottom part of the rectangle, it hasn't broken down, but boy, each lower low is testing the 329 key support because it went to 327 the other day. So this is saying lower lows. Look at the time it's used, the IBB. There could suddenly be a spike to the upside because using time is, in fact, a definition of a price move. It's a definition of a range, but it's also a definition of a direction. And this direction is decidedly sideways so far. I think it's going to break down at some point, but it's going sideways for now. So that's a question. Then another question was if I could just look at the TLT again, just to explain that I've got a gray peak C in the weekly chart. So that could break down. There's no guarantee that it needs to go to a D, and it's a leg C in the monthly chart. So I'm just looking at parameters, and I'm saying that the TLT just broke under the 9-period moving average It's at 125.01. I'm suspecting that if the TLT, the Lehman 20-year Treasury bond ETF, actually closes under 124.50, it's going to be a fairly quick ride to the 122.64 area. But, and this is what I'm trying to keep in mind, there is a chance for a little bit of a double bottom here on the TLT at 124.71. That would imply to me that if bonds were to rally strongly, and the only way you could do it has to do it really quickly, and it has to get above 127.50 for me to even consider that this is going back to the Japanization of our bond yields, where rates go lower and lower. If bonds go higher and rates go lower, that's going to be part of what I've been looking at as a signal to say now the market can go down deeper because money will come out of equities into the safety of bonds if yields can go lower. If the bonds can rally. And that's going to be very interesting. So make the criteria very simple for me. Under 124.50, watch out below. Over 126.30, it says, hey, we're back to that Japanization of our bond yields going lower and lower. So I hope that helps you. And the answer now, I can go back to the QQQ series because I needed to get to show you that there's a rotational market going on and that we've got to be aware that some sectors got beaten down very quickly and are trying to regain strength, like the SMHs and some of the high-tech stocks. So now what I want you to do is to look at the NASDAQ. It would have been way better if instead of bouncing to the over 144.25 this morning to 144.38 and now being at 143.84, down quite sharply, if we were closer to the 9 EMA. So the answer to the question is it a negative that we were repelled once again from the 9-period moving average? Absolutely it is, which means conversely, that if there's a close by Thursday or Friday above 144.26, we've got to respect that you're going to see some counter trend movement in some of these big caps, like at Amazon, trading right now, up 8 at 946.99. Look at this. Went to an arch formation low, took out the left side low, closed above it yesterday, and we'll see if it closes above it today. So that is a good sign that is trying to bounce. I'm going to treat it only as a bounce for now. So Amazon is indicating that the Qs are ready for a bit of a bounce. I suspect that the Qs are making lower lows and lower highs, that the sell mode in the daily and the week daily chart is going to be confirmed in the weekly chart if the Qs close under or close to 142.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, so this is going to be very OSTK, Overstock.com, Inc., online products. I was asked about it. I featured it a little while back in my newsletter saying it's something to watch. Watch. Look at this. Little tiny red candles going lower lows, lower low highs, low lows, and then suddenly, bam, today up $4.09 at 27.54, up 17%. Must have had good news. And, you know, what do you do with a stock like this? I was going to do this a little later in the week. I don't know if I'll do it. No, I don't have time to do it today. I was going to bring up program that I have that identifies stocks that kind of do this thing, and how do you get on them? What do you do? Can you get on them? Well, the history. Actually, I'll do it right. So here it comes. This is TC 2000. Wrong one. Yeah, that's the right one. TC 2000. This is a Warden Group. There it goes. TC 2000. Okay. Oops. Got to put in my code. Now, look at this. There are so many stocks that have this kind of move, and it's so difficult to know what to do. And over the years, slowly I've become to do it. We did it with one stock, which had a spectacular move to the upside. But it takes me a lot. Oh, they don't have so many today. Let's see what this one does. Nope. Oh, what a pity. I thought this would be a great, nope. Let me just click these. I want to see. There. You see this stock, whatever it is. This is Wild Horse Resource Development. Let's not worry about volume or anything. It does have 500,000 average volume. The symbol is WRD, Oil and Gas Exploration. So it's gone to an A, B, C, a D, and an E. Well, I didn't see this particular one, but I was looking at 3 stocks last night that had exactly the same pattern, also in the oil service, in the oil resources, energy, oil and gas. And there is somewhere over there. And the only way you can do this is to say, this is a fantastic looking chart. The overhead resistance is up there. I'm grabbing it right here, and I'm on my way. And I put in a stop, and that's it. That's the only way you can do it. I don't know if I can find some more. Oh, is that one that I looked at? EGY? Nope. GST. I'm just grabbing these to show you because of what we just saw. GPRK. Not quite. I want it like this here. And then you've got to buy it, and then you're going to get stopped out at some point. And sometimes they go on for way longer than you anticipated. It's interesting. So this has got a selection from the industry components, oil and gas, E&P. But what I'm looking at here, if I can just find one, did I write it down? No, I didn't write it down. Oh, what a pity. Oh, there it is. Yes, SJT. Is that an SJT? Yeah, this is San Juan something or other. And it's an oil and gas. So it goes A, B, C, D, E, F, kaplop. And then it goes A, B. Now you don't know in a move like this, is this part of that F going to a G? No, I think it's a brand new A to B. So what can you do? Can you just grab it? Well, this is where if you're at your computer and you're watching it all day, there's no reason you grab it at 8:30 right now and you say, wow, I'm going to put in, you make a very tight stop, no more than 2% maximum. So like a 16, 17 cents, and you just let it go. And if it takes that out, that high, it should go even higher. So the reason why I wanted to do this little illustration is to show you that in overstock trading at 27.70, yes, it could pull back, but there is upside momentum. And if you want to day trade it or just short-term trade it, you've got to stop your thinking and you've got to say, look, the left side high, it's taking it out. The next one's up at the 31, 32 level. Bam, I'm in. And you put in a tight stop and just let it do. Now, I can't do that for subscribers because I don't know where we're going to get in correctly, etc. Occasionally, I'll do something close. But most of the time, this is very difficult to do. So I'm looking at this and I'm saying, my target would be, give you the exact price, will be a test of the left side high of 31.47. So that's 4 points. That's a nice percentage move on a trade. And the only way you can do it is to grab it right here and say, regardless of what the market does, this is on fire. I want it, and I'm putting in a tight stop, or I'm putting in two buys. One to grab it right here at 27.65, give it 60 points down, 60 cents down. So around about 27, we put in another bid, and then you just let it ride. And you have to have your stops, and it'll do what it's going to do. So my bias is that stocks like this, that were looking very good, especially in the cup formation, have very good support at this particular point, and this is overstock, and it seems to be in that category. So that answered there. Next one was Trump looking to deregulate money center banks like Bank of America and Citi. I had a question, would I look at that and Bank of America? Yeah, Bank of America, don't type it on the chart, type it into the little box right there. BAC trading up, a little trading up 65 at 25.46. Actually, it's near the highs of the day. So we're all along this thing from the mid-23s to 25.45. I like it. You remember my anticipation was that it was going to make a D in the weekly, and a D, if it does that in the weekly, it can still climb higher to go to 25.81, which would give you a leg D in the monthly. If it's this move, I don't know, but it's not that far away, 25.81. I mean, it's another 36 cents. So, yeah, I think it's going to do it. And we're in leg C, so I think that would be my target. So, yep, I hope I answered you there. And the support is at the 25.03 to 24.72-ish area on any pullback. Next question I had was Boeing, BA. Boeing. Yeah, this is a peak D in the daily. Now, I'm suspecting that Boeing and a couple of other stocks are going to give me tremendous clues as to what happens the first week of September, that's next week, and what happens going into the first week of October next week. And the reason why is that it's made a peak D with good mixed technicals. The MACD is good, but much lower down than it was previously, and the stochastic is very good, but pulling back to the 83% level, still strong, and I'm liking it. But the weekly chart is really the one that's going to give the clue. If there is no new high this week above 259.30, we might be seeing a potential for a peak F in the weekly chart. And I don't want to even give it an alternate count right now because everything about it says it's in that F phase. So let's just leave it there and see what happens. And I'll tell you what will happen. Is it close below 255.05 up $1.35? If there's a close below 253.20 to 225, 253, that's it, 253.20. A close below that, 252.63 is the 9-period moving average, and 250.29 is support. I think that if Boeing very quickly takes out the 253 support, probably the 250, 263 9-period moving average support will go as well. So it's extended somewhat, and I'm thinking it's going to be chop, chop, chop. This whole base of support in the 241 to 230, 234 area, I think we're going to test that in October. Okay, I'll check out any other calls in our final segment coming up. Basil Chapman, Tiger Technicians Hour. Dow's up 17, S&P's up 363. Chop, chop, chop. That's what we're looking for. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget to listen to Steve. Always a wonderful show. All right, we got this Dow up 18. Now, what's going to be? The EWZ I was asked about. iShares Brazil Cap ETF. Trading down 93 cents. Down 93 cents, and it is at 40.76. After making a peak F in the daily, and I'm not sure yet, just a B. Let me go back. I don't want to just do this arbitrarily. You always have to go as far back as you can. Yeah, I can't do it right now. But it's holding the 9-period moving average in the weekly chart. EWZ at 40.79. Make it real simple. If it closes under in the next week, if it closes under, not the next week, this week, if it closes under 40, there's a good chance that the weekly chart will start to turn a little bit negative, but it's still got some strength. So I'll be surprised if it doesn't have a bounce before it gets to the 39s, but there is leg D in the monthly chart. Need a little time. I just need to see where it closes for the week. So another question I had was, will I look at MU This is MU, of course, the semiconductor, micron technology. Huge leg in leg C above the all-time high back from 2014 in the 35s. It's now in 3690 area. It's in leg D daily and G/CD. This is a A, B, C. Oh, man. This really looks like a brand new. I'm going to call it for now. I could be wrong, and I might have to change it. I'm calling it a leg B in the weekly chart, but I think it's really an alternative count. But I'm just going to say weekly. I'm not. MACD and stochastic are good enough for me to say that, but it is a gap up to a leg D in the daily, and that just says to me at 36.88. Technicals on the daily and the week daily are not that good. The weekly chart's very good. So I'm going to be watching it closely. So it's not, the question was, should I buy it or should I not? My analysis here says that at 36.89, Micron has tremendous support in the 34 to 33 area. Stay tuned for Steve Rose. The Dow is up 13, and we're going to see today's close is going to be really important, telling me about not just the end of the week, but going into the first week of October. How we close, and the sectors, how they close. A lot of information coming at us at the end of the day today. Have a wonderful day. I'll be back tomorrow. Stay tuned for Steve, Dave White, and Tom O'Brien. Be back.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.